Okay, so there's a huge shakeup happening in India's tax system, and believe me, it's designed to hit you right where it counts, your wallet. They're calling it GST 2.0, and in this explainer, we're going to break down exactly what that means for you.
I mean, seriously, just imagine for a second. What if your monthly shopping bill actually got a little lighter? You know, your groceries, that new TV you've been wanting. What if all of that cost just a bit less, month after month? Well, that's pretty much the core promise behind this whole thing.
And listen, this is not just some minor tweak. Starting on September 22nd, 2025, a massive upgrade called GST 2.0 kicked in, basically rewriting the rulebook for India's goods and services tax. The goal here is ambitious, to say the least, to make everything simpler.
All right, so let's zoom out and look at the big picture. This whole move is about taking a tax system that, let's be honest, had gotten pretty complicated and making it way, way simpler for everyone.
You can think of GST 2.0 as a big software update for the entire country's tax code. Its job is to simplify the rates, cut down on the headaches for businesses, and, the part we all care about, actually lower the costs of the stuff we buy every day.
All right, let's get into the nitty-gritty. The single biggest change, the one you're really going to notice, is how they've taken the old system with 4 different tax levels and slashed it down to just 2.
And wow, the difference is night and day. The old system was kind of a maze, right? You had these 4 different rates. The new system just gets rid of those 2 middle ones. So now you've got this super clean structure, a low 5% rate for the essentials and a standard 18% rate for pretty much everything else. So much simpler.
So what does this actually mean for your wallet? Well, here's where it gets good. Those big-ticket items, think TVs, ACs, even small cars, they're dropping from that high 28% slab all the way down to 18%. And your daily essentials, things like soap and toothpaste, they're now in that lowest 5% bracket. I mean, that is a massive difference you'll feel.
But it's not just about consumer goods. The benefits for healthcare are absolutely huge. Get this, for 33 specific life-saving drugs, the tax hasn't just been lowered, it's been completely wiped out. We're talking 0% tax. They're totally exempt. That's a game changer for patients and their families for sure.
And it doesn't stop there. Another huge area of relief? Insurance. The premiums you pay for your personal health and life insurance policies are now also completely exempt from GST. That's a direct cost reduction when it comes to protecting your family's future.
Okay, so you might be wondering, if they're cutting taxes left and right, how is the government supposed to pay for everything? Good question. They're balancing the books by creating a new higher tax bracket. A 40% rate is now going to apply to luxury items and what they call sin goods. You know, things like tobacco and sugary drinks. This is meant to help make up for the revenue lost from all the other cuts.
Which, brings us to the really important question. Why? What's the master plan behind this great simplification?
Well, it's really a multi-pronged approach. First, just simplify the whole system for everybody. That leads directly to relief for you, the consumer, because prices should come down. And when you have more money to spend, that's supposed to kickstart the whole economy. At the same time, this is a huge help for small and medium businesses. We're talking way less paperwork. And all of this is done while trying to keep the government's budget in balance. It's a big juggling act.
And this quote really nails it. When you have fewer slabs, it's just easier for everyone, businesses and you, to figure out what the tax rate is. There's less confusion, less ambiguity. It just makes the whole system cleaner and more efficient.
All right, so that's the theory. But what's the actual impact going to be out here in the real world? Let's break down who wins and also what could possibly go wrong. The hope here is to create this awesome positive ripple effect through the whole economy. You see, it starts with lower GST on goods. That means more money left in your pocket at the end of the month. With more disposable income, people naturally spend more. And all that increased spending, well, that could give a serious boost to the national GDP. So, who stands to benefit the most from all this? Well, first up, households. That's a no-brainer. Cheaper stuff is always good. Then you have the small and medium businesses, the MSMEs, who get a break from all the complicated tax rules. The rural economy should also get a nice lift. And finally, the manufacturing sector, because it'll just become cheaper to make things in India.
But, a change this massive is never a sure thing. There are definitely risks to watch out for. For one, there's a real chance the government could see a dip in its revenue. Then there are always hiccups when you try to implement something this big. But maybe the biggest worry of all? What if businesses just pocket the tax cut and don't actually lower their prices for you and me?
So, what's next? Let's talk about the key things we all need to be watching for as this new system really takes hold. At the end of the day, whether GST 2.0 is a success or not really comes down to a few critical questions. Are retailers actually going to pass on those price cuts? Will the government's revenues hold up? Can everyone at the state and central level manage this new dynamic? And maybe most importantly, will it really be easier for small businesses? The answers to these questions, that's the real test.
So here's the bottom line. The plan itself is simple, and the potential benefits are, well, huge. But the one question that really matters is, will the savings they're talking about actually make it from paper all the way into your pocket? I guess we'll have to wait and see.